Yeah. Hi everyone. We want to expose about the Harvard case, Siemens and Healthineers valuing the IPO. The team members are Diana Long, Vanessa Aguila, Johnny Calderon, and me, Giancarlo Avila. Well, in the first, is the summary of the case. Um, the case beginning with a Siemens company that have an origin in Germany and present a subsidiary that is Healthineers. And this subsidiary is specialized in three areas, that is medical equipment, diagnostic, and therapies. Um, some interesting about that is that Healthineers have a different like areas that the company Real Siemens. Well, specify in Healthineers, the company have an increase in the years about his sales, so that makes the Siemens um, beginning to try to sell his shares, part of his shares in the stock market to have like new investments. So the company Healthineers put 50% of his shares in the stock market, and some investors like the Deutsche Bank like criticize the side of the company because they were thinking about that the sale could be like a 30%, but was 50% because even though that the increasement of the company Healthineers is going to be very high and have a lot of support. Well, in the question two, what was the investment thesis for buying Healthineers? Well, um, there is some like characteristics. That is, first of all, Healthineers is from Siemens, so Healthineers have all the support financial with Siemens. Other things that is for his highest sales have a growth projection and also have a good cash operation and good operation margin. In addition, they are always improving new technology about medical equipment.
I'm gonna answer these questions. So we take some data of the case. For example, the PE of the 2019 for sectors and the projected EBITDA from Deutsche Bank. Next, please. So we have a multiple variation where the EBITDA is 2,800, the PE is 1579, the equity is 45,000, the debt is 1,300, which is a data from the case, and the enterprise value for multiple valuation is 46,000. Next, please.
In this part, we are going to answer 3 questions. The next slide. Okay, the first one is what might lead to different multiples. Multiples represent a single case of a situation of a company instead of a long period of time. So it will show short-term data. The second one is how might France explain to investors. So in Imagine, EV divided to EBITDA, it will show, it will seem that all the companies except Varian will less than the average, which is 12. The another case is the EV divided to sales. Quangen and Thermo Fisher are overvalued company. And finally, advanced therapy, it has a very high average because Intuitive Surgical has a EV divided to EBITDA of 30. However, most of the competitors present as much smaller multiples. The third question is how would he explain appropriate multiples to Healthineers? So valuation multiples are financial measurement instrument that evaluate one financial measure relative to others. So that different company are most comparable. So yeah. Mm-hmm.
Okay, I'm gonna answer the question number 5. Next, please. So we had some assumptions. For example, the data of this bank was modified because in the forecast of the bank, they use invested working capital to the next year. So we use the invested capital from the year where the difference is evaluated. Also, the forecast is until 2022, and we assume a growth perpetuity of 4%. In the case is 2%, but from 40 years later, which is not good for analysis, for a predictable analysis. The WACC is 8% and the debt is 1,300 millions. Next, please. So we have an analysis of WACC method, which the enterprise value with WACC is 49,000, the debt is 1,300, and the equity is 47,000. Next, please. Okay, I'm gonna answer these questions. Next, please. In the first case, there are many factors that can affect the difference between segments. For example, some companies have a good market capitalization, a high total debt. In the second questions, the values can change by sector. For example, diagnostics requires a lot of depth because it requires machinery to do operations. So companies usually take debts. And the third question, market capitalization is an important factor because many times is the higher value than total debts. So it depends on the quantity of shares and the price shares per companies. Next, please. Yes, I will recommend any other method, which is the dividend discount model, because dividend represents the actual cash flows going to the shareholder. So evaluating the present value of this cash flow should give you a value of how much the shares are worth. In this case, France is looking for be a shareholder of Siemens, and DDM analysis can give him an idea about the present value of a share. This model can only be used if there is a historical information on dividends. In the case there is no historical information of dividends, so we assume that if we had, this model is going to be successful. Next, please.
So, in according to question 8, next please. The evaluation of the sum of parts is necessary to evaluate a company, evaluating separately the value of each business segment or subsidiary and adding them to obtain the total value of the company. It can be used in conjunction with various valuation techniques, such as discount cash flow model and comparable company analysis. In the case of Healthineers, the use of this technique is convenient, since it is made up of 3 segments and requires a high degree of financial details for its acquisition. With these techniques, France obtained the total value of the company. Next, please. With respect to question 9, as it states, the first case is based on the evaluation of the sum of the parts that Healthineers presented. Your purchase was convenient because it showed separately that it is a leader in each of its sector, and with the creation of its new platform, Aguila, for one of its business as diagnostic, it will increase its leadership position in the market. In the second case, among the key questions France developed for his analysis were, would it be a good addition of Healthineers to the Siemens portfolio? Which techniques will be better to obtain the prepared price per share from Healthineers? The use of discounted cash flow model or valuation of the sum of the parts? Next, please. Next, please.
So the first conclusion is that IPO are public offers in which shares of private companies are launched for the first time to a general public. By acquiring a share, you can become an owner of a small part of the company.
Another conclusion could be a company with a good financial history and a considerable future projection can offer a high IPO.
Another conclusion is investment bankers are key to companies wanting to promote themselves to potential investors as they help them determine the number of shares for which they will sell on the public market.
And another conclusion can be to evaluate an investment, it is important to analyze different valuations methods because it gives us a clear vision of what happens in the company, in the market, in the shareholders, and how we manage the cash flow both at the present value.
Now, recommendations.
IPO is recommended for startup and small companies. In this case, Siemens, Healthineers shouldn't launch an IPO despite being a good in the Siemens group, as it has a long history in market.
Other recommendation could be Siemens should have considered other ways to increase the growth of Healthineers, and due to the size of Siemens, they need for new capital by investor would not to be necessary since the same company have contributed to that. In addition to that, margin 50% would not be such a high margin of support due to the loss of percentage of the company that had a great protection in the future.
In order to have an optimal share price, discount cash flow techniques and the valuation of the sum of the parts should be obvious. With both methods, a more precise value of the company will be had.
It is recommended that when someone evaluating use different valuation methods in order to obtain a return on the investment from a general perspective of the company where will be invested.